Hey everyone, this is June from Turning Point Life Investment, and this video is for the week of August 30th, 2008. Starting with the weekly view again, with the SPY, we noticed that the rally has stopped right under the 20-week moving average, and these last couple of weeks we're basically stuck under this resistance. Let me zoom in a little bit. You notice how the size of the candles, the bodies of the candles, notice how small they are. This basically tells us that the bulls and the bears are fighting each other. They're duking it out, but no one's really winning. The bulls are trying to push it higher, but yet there's not enough conviction to push it through this resistance. At the same time, if you look at the size of the lower shadows here, it indicates that the bears have also tried to push prices lower, but yet they don't have the strength to close underneath it. So right now we're basically stuck in this little range right here. If by next week the new traders come back and trade, if we can push through this resistance, look for the next level of resistance at the 50-week moving average. Volume, of course, you can tell it's low, probably due to the summer month, and it's also the week before Labor Day, so most traders are enjoying their summer. Stochastic, it's pointing upwards. Both lines are pointing upwards, so there is a slight bullish momentum currently, and same with the MACD. The MACD is also in positive territory, so there is a little bit of bullish tendency right now, but not that strong. Going into a daily view, really there's nothing much to talk about that we haven't talked already in the weekly view. We are still stuck in this range here. Notice how prices are moving in and out of the moving average. That indicates choppiness. When you have something like this, when it's trending, it's nice and moving averages are separated. But when you have something like this, it's all choppiness, and that basically indicates that we're really going nowhere. Now here's something that's interesting I want to show you guys. From the last rally we had a similar wedge pattern. Okay, so similar wedge pattern. And look what happened after it broke the wedge. We have a W kind of looking pattern right here. And look at what we have here. We have a wedge pattern as well. And look what happened after we broke a W kind of looking pattern as well. Now, is there any significance to this? I don't really know. All I'm showing you guys is that patterns do repeat themselves, right? You are talking about people and human emotions played out on the charts here. So, being humans, we do tend to repeat ourselves. We do have habits. So when you see a pattern repeat itself, there's a good possibility that it might signal a decline in the coming week or so. So we'll see how true this is, right? And once again, looking at volume, volume's low, stochastic and MACD not really saying anything. Going into the hourly view, once again, we are still in a range between 130 and a half and 126 and a half. Okay, you can tell, like I said, it's moving in and out of the moving averages. Now, a great signal to trade when you're stuck in the range bound like this is look at the stochastic. Every time we hit an extreme either oversold or overbought condition, prices did manage to reverse. Right, last time on Thursday we closed at overbought, and now we declined on Friday. Trading based on stochastic, I find is it's only good for range bound prices. When prices are trending again, the stochastics they don't really work so well because a stochastic can stay overbought or oversold for a long period of time. But as far as support and resistance go, immediate resistance at 130 and a half. Next level obviously is the 131 and a half. And if 126 and a half breaks, look for support right around the 125 area. Going into the VIX daily, we did find support right here, right above 18, right, same as this, above this line here. It is trending downwards, but I mentioned a few videos back that we are showing divergence with the MACD. The VIX is moving lower, but the MACD is getting weaker and weaker, and it's actually going into positive territory right now. So a more bearish signal, more confirming signal will be a trade above the 20 and the 50-day moving average. So something above the 22. If the VIX can get above this area, then that's a very good signal as far as bearish sentiment in the market. And then going into the open interest, this is the open interest for SPY for the month of September. Now looking on the calls side right here, the only strike price that does pop out is the 130 strike price right here. We have over 100,000 open interest. So this tells us that there is really strong resistance right at the 130 level. Going into the puts side, see here you can tell there's actually several high open interest areas. Now we see that the immediate ones is right around the 127, 128. The next level we have a cluster right around the 123 to 125 area, and then ultimately we have the 120, 121 support. So you can tell that there's pretty much three area of support if SPY were to drop down that it has to encounter. Going back to the SPY, just to recap, once again, I guess, short-term neutral on the market. I guess that's a safe answer to say. Long-term, still bearish. We still need to break 126.50. That would be a more confirming signal to the bearishness. And if the market happens to break above this area, that basically signals that it's another leg of correction. Usually the correction occurs in three legs. So if this is the first and this is the second, we might experience another third leg of correction. So we don't know until it's able to trade above here.